I'm Peter White. Welcome to the Inside Network. Welcome to INDepth. I'm Peter White, and my guest today is Cameron Brownjohn, CEO of Federation Asset Management. Cameron, can we start by talking about your rationale? What does Federation do in essence?
Federation serves our investors that generally want us to protect their capital and to grow it. We think the best way to do that is to invest into businesses and assets that meet a social and an economic need. In point of fact, I guess we have a very large private equity portfolio, a very large portfolio of social infrastructure, and a growing portfolio of sustainable infrastructure as well.
Well, you're operating in the private equity space. That's generally a space for institutions and high net worth family offices, but you're targeting financial advisors and mum and dad investors. How big a ask is that to get your story across?
Oh, very good. So Federation has products for institutional investors, and as you say, also the Australian and New Zealand wealth management channel as well, right down to mum and dad investors. And we like having that diversification of product. We like to be able to provide what we call institutional grade opportunities for everyone. And in terms of your question around how difficult it is to get the message across, it's not terribly difficult at all. I think everyone likes an idea of investing in a prudent way into industries that are safe yet growing. And we think that it's an easy message for folks to understand that they're seeking to have their capital protected and grown in a prudent way. People will often, Peter, look to our track record when it is that they're making these decisions, and the Federation team have exited more than $4 billion of these private equity opportunities over a long period of time, since 2011. And in aggregate, our team has achieved a 23% annualised return. That's akin to trebling our clients' capital every 5 years or so.
Well, you seem to be targeting several, it's a themed offering, it seems to me. You're targeting energy transition and social infrastructure as two particular sectors. Why these sectors?
Well, we're strong at anything to do with the energy transition because of the team members that Federation employs. And similarly, we're strong at anything to do with the ageing population thematic. So Federation's team members are good at financing businesses. They're good at insurance businesses. They're good across the care sector, and that can be aged care, but it also stems into things like broader healthcare services, healthcare facilities managers. We're strong at the disability care sector as well. And we're good at a range of other sectors, but you're right to point out thematically, two of the key thematics that the Federation is pursuing is this energy transition that's happening in Australia right now and that will continue for the next decade or so at least. And the true ageing population thematic that will continue on for a generation.
Liquidity is not something one normally associates with private equity. You're offering monthly liquidity. How can you do that? And is that an attractive or unusual feature for the space you're operating in?
Wholesale investors, retail investors, they're willing to be patient with an allocation of their capital to a point. What happens if circumstances change? A life event, perhaps a death in the family, perhaps someone may lose their job, perhaps some other unforeseen health event. In those instances, it's our experience that retail and wholesale investors may want to have access to some of their money. That's why we have designed a product for the wealth management channel that gives them that liquidity if they need it. If people want to get into a Federation product, they may be seeking to hold that for a period of years, but if they need their money back, they can get it back every single month. How do we do that? We provide a level of cash in our fund that we preserve to allow people to exit from the fund. And frankly, those that want to exit take priority over the next private equity investment that we should need to make. So it's not particularly dilutive on returns at all. It's just a prioritisation of acknowledgement that our clients' circumstances may change, and we want to preserve some capacity for them to find a way out.
Can we drill down into the fund and talk about some of the notable assets that you either have already or are targeting?
It's a diversified performing portfolio of assets, which we're really proud of, and we've been holding for a number of years now, and we're working really hard on. One such example would be George Health, which is a contract research organisation. It does drug trials for big pharmaceutical companies. It's a global business. 20% of its revenue is in China, 20% of its revenue is in India, 20% of its revenue is in the rest of Asia, 20% of its revenue is in Australia and New Zealand, and 20% of its revenue is in the North American and European markets as well. So truly a global business. It does drug trials for big pharmaceutical companies globally. These people came to us in the middle of 2019 wanting some capital to grow their business into Asia. We did due diligence on their business. We provided that capital to the company, and we're excited to see how it has grown. But I guess importantly for our investors to understand, we didn't give them the money as edge of value equity at the start. We put our money as a convertible note. That allowed us to put our money in a downside protected way, and to really be away from that edge of value so we could suck it and see for a while with how that company would perform. Well, we're pleased to see that it performed well. Its earnings trebled in about the 3-year period that we held this investment. We've recently agreed to sell it, and we're pleased to note that we'll make a 6.1 times money multiple. So we've multiplied our investors' capital by 6 times in a little over 3 years in that investment at about a 70% annualised rate of return.
You say they came to you. How do you generally find your investments?
Our team are known for the areas in which they play. They're not known for all sectors. We're not particularly good at all at manufacturing businesses at all. So we just avoid that sector. But in the areas that we play, say around the energy transition thematic, say around those sectors that play to the ageing population thematic, healthcare being one, people know us as being a team that's strong, that we will do what we say we will do, and that we have a proven track record of adding value to our portfolio companies in those sectors.
You mentioned the rather large returns you've got over the years. What's the headline figure that you're targeting in this fund for investors coming in? What number are you putting in front of them?
Well, we are hopeful to point to our historical track record. And frankly, with the range of opportunities that we're seeing, we are prudent, we are cautious. And as Federation, we've in fact invested in less than 1% of the things that have come in the door that we could have otherwise funded. So less than 1% of the things that we've found. That's pretty picky. So because of this pickiness, I guess the only and best identifier I could give for what we're targeting is our track record. And we have achieved a 23% annualised return on over $4 billion of exits since 2011 as a team.
So 23 is the magic number.
That's what we're hoping for, sir.
When does your strategy not perform? In what conditions or what circumstances?
Maybe the way that I'll answer that is the way that the institutional investors who have given capital to Federation to invest, the way that they due diligence people like us. And in aggregate, Federation is currently managing 1.4 billion Australian dollars of client commitments. And the overwhelming weight of that is from institutions who have done deep due diligence on Federation, our capabilities and our track record. These people consider Federation to be a team that can perform in bull markets and can perform in bear markets. So in recessionary environments, in fact, has been some of our best performing investments historically. As a reminder, we've been operating together as a team since 2011, so a long time together and for a private equity team. And we change our behaviour. We ensure that our underwriters designed to protect the downside of our investors' capital. All of our underwrite really at Federation starts with how can we not lose money from this investment? Then it is when we've convinced ourselves that that's achievable, well, then we turn our minds to how do we make money out of it. And I think in a recessionary environment, we're actually a net believer in a recessionary environment coming right now.
So you've got no trepidation or fears going forward?
Well, I think it's probably fair to say, Peter, we're always fearful. We're a fearful, cautious investor. We've done less than 1% of the investments that we could have done as Federation. And that sort of caution, that nervousness as an investor, we take our role as a fiduciary of our clients' capital very seriously. That has held us in good stead over time.
What are your 2 highest conviction ideas at the moment?
We like the energy transition. So Federation owns Australia's best wind farm developer called WindLab. We own one of Australia's biggest batteries, biggest energy storage batteries. We own a range of other energy generation assets very well tailored to this energy transition theme. We think it's a $150 billion opportunity set over the coming period, and we think that there's very exciting returns that can be made for our investors in that space. Equally, things that we're doing in the ageing population thematic, particularly financing businesses and care businesses, there's a range of investment opportunities that make a whole lot of sense for our investors to us.
There are two sectors that the new federal government seems to have targeted. Has that been an aid to you there?
It's only been a help. We weren't doing it because there's been a change of government. We were doing this well before a change of government. We've been doing this for a long time. But yes, I think that the change of federal government can only help us.
What's been the market reaction when you're out there raising funds to the concept?
People like the story. People are investing with us. A number of our investors have been with us for a long time and continue to top up their investment. And we're excited to see that the number of people that are investing with Federation is growing.
Are many of your investors attracted to what you're offering because of the lower volatility of unlisted private equity versus listed?
I think the traditional arguments for why people would want an allocation of their portfolio towards private equity are related to the lower volatility, as well as the higher return potential that you can gain, as well as the reduced correlation with, say, other elements of their portfolio. So unpacking each of those very briefly. Private equity managers tend to think in long-term time horizons, 5, 10 year, maybe even longer time horizons. The listed equities market can solve for the next earnings result. Maybe that's quarterly, maybe that's half annually. So the time horizons and the patience through which we're trying to steward our companies through to drive value is a far more patient and therefore less volatile way of doing things. There is an element of the way that some private equity managers will mark to market their investments. That'll also obviously be less volatile if they're marking their portfolio to market less frequently than what the stock market may be doing. In Federation's instance, we mark to market our portfolio every single month because we want to attract investors every single month, and we want to permit those investors that need their money back for whatever reason to exit every single month. Returns is another key reason for why people will invest with a private equity manager. There is a lot of data over a long period of time that suggests that private equity outperforms the listed market in all forms of markets. And then on the correlation point, frankly, there's a lot of data over a long period of time that shows that private equity is relatively uncorrelated to people's listed equities portfolios. So there's a few reasons there for why people would consider an allocation to the asset class.
Is private equity totally mainstream or vanilla now, or is there still a little bit of mystery about it? What's your view in terms of being in the marketplace so active as you are?
Private equity just means investing in unlisted companies and assets. It also means taking listed companies private. So if you think about it from that perspective, it's been happening for a long time. Much of Australia's wealth has been generated by people who have built private companies and then gone on to list it. That is what private equity firms do. So it's not a magical thing. It's just I think a well-proven, well-trodden road.
Well understood?
I think so, and certainly by the institutional market, it's where the predominance of their capital or a large swathe of their capital can be invested. So take, for example, the Future Fund, Australia's sovereign wealth fund. The Future Fund actually has a higher allocation to private equity and alternatives than they do to listed shares right now.
Cameron Brownjohn, thanks for talking to us today.
It's my great pleasure. Thank you so much.